Hello and hi, Michael. It's so nice to have you here on my channel. I think it's the first time we met together in front of camera, but yeah, nice to have you here.
Yeah, thanks for hosting me.
So, Michael, let's do a little bit jumps through the history, your Bitcoin journey. So, I think everyone in the Bitcoin community knows you as one of the Bitcoin bulls or the biggest Bitcoin bulls. But in 2013, you made a tweet. It said, Bitcoin's days are numbered. And yeah, it seems like it's just a matter of time before it suffers the same fate as online gambling. What made you change your mind in 2020?
In 2013, I was more of a tourist and I had about 100 opinions on 100 different things. And I wasn't really heavily economically invested or emotionally invested in any of those things. And so that tweet is the tweet of an intellectual tourist looking from a distance without really have what I didn't have in 2013 is I didn't have a need for Bitcoin. And I didn't have a deep understanding of the technology, and the ideology of Bitcoin. I just had the observation of you know, a casual intellectual. What changed over the next 7 years is, I think, primarily I had a need for Bitcoin, right? I mean, the most important thing is to need something. I joke with people. I say Bitcoin is on a need to know basis. If you don't need to know, then you're not going to dig deeper. So the first thing that happened in 2020 was the COVID lockdowns, and bringing the entire world economy to a grinding halt will make you stop and take notice. And when the economy stopped, when the offices shut down, we had to embrace a lot of new ideas. So, for example, Zoom or remote meetings and the like, right? Things that I had rejected for the previous decade, all of a sudden I accepted in a couple of days because I had to. And then what followed next was, in essence, the equivalent of a lockdown of the financial market. If you take interest rates to zero, right, you're basically trying to stop the passage of time. It's like trying to make water flow uphill, right? You're stopping entropy. You're trying to interrupt gravity, right? The idea that all capital shall be valued at zero. It's such a such a strong point. It's equally strong too, and no one can come within 6 feet of anyone else on the planet, right? Families can't meet. You can't go to the office. No truck can roll. No airplane can fly. So, in the same way that we basically shut down Main Street, we kind of shut down Wall Street in a weird sort of way. So that cost capital went to zero, and that caused a huge spike in some assets, right? Like stocks went through the roof, and that was a paradigm shift. I mean, a massive disruption because what you had was a world where a set of decisions got made, and the decision was if you work for a living, you can't anymore. You're going to starve to death. And the second decision is if you have cash in the bank, it's now worthless. And the third decision was if you happen to hold a piece of real estate or an equity, it's worth twice as much. So, how is it possible that certain assets are worth twice as much and certain people got insanely rich and had a great year when the entire economy shut down and the value of capital was zero? So, all of a sudden, that's such a disruptive, disturbing event that would cause you to go back and question your premises. So, at that point, I had a problem and the world was disrupted. And that was in that 12 weeks, I accepted Zoom, I accepted remote work, I considered what true digital transformation was. And then I had to start thinking about capital and if you didn't really care, for example, you might not care that a few people in a central bank set the cost of capital for the world. You might not care if you're invested in a portfolio of big tech stocks like Apple and Google and Facebook and Amazon. And if those stocks keep going up and you feel like you're getting rich and the world is working, then some theorist in the Bitcoin community says, there's something wrong with central banking, right? The Creature of Jekyll Island is not a book that I would have read in 2015 because my view was, oh, Google's great, Apple's great, Amazon's great, Facebook is great, the world's going through a digital transformation. That's where all the action is happening. What does it matter that we created a central bank 100 years ago on Jekyll Island, right? It doesn't matter because you don't have a need to know. So in 2020, if you're sitting on a bunch of cash and the interest rate goes to zero, and the central bank says the interest rate's going to stay at zero for the next 4 years. I mean, there was a point where they literally said, yeah, interest rates are zero. I'm not even thinking about raising rates until the year 2024. Right? At that point, you stop and you're like, okay, wait a minute. My business is shut down. My capital is worthless. And there's some people in the economy that are winning. And there are some people that are economy that are losing. And the ones that are winning are doing no work. And the ones that are losing are working themselves to death. And you're playing a losing game. There's a point there, right? A sobering point where you just realize the casino is rigged. If you stay in the casino, you're going to lose everything. The only way to win is cash in your chips and walk out of the casino, right? And then you got to either create your own casino, create your own game that you can win, or you better find a different game or a different pursuit where losing is not a guarantee. So I would say that's what happened in 2020. And I came back to Bitcoin when I just realized that the system that I was working in was in essence wired such that there was no way to win.
Yeah. Do you think that there are so many educated economists out there and they all misunderstood Bitcoin, or a lot of them? So do you think they are still on this view, on this old way? They see Amazon and everything and say, hey, it's working. Why we need Bitcoin? Or what do you think make them misunderstood Bitcoin so much?
I think that if we step back and look at the big picture, I think the great majority of economists don't even understand money. And if you look at it, the only people that came close to understanding money are the Austrians. But the Austrians didn't have the internet, semiconductors, and cryptography. So the theoretical, perfect money is a shared, immutable, true ledger, right? And nobody in the history of the world created a shared, immutable, true ledger, right? The closest thing is if a philosopher king ran the monetary system and they were fair and equitable, maybe. But that only happens for short periods of time, and then they get deposed or they die or they whatever. And generally, that we don't see that. And so that being the case, the closest thing to something that was effective money was sort of maybe gold or maybe sort of a credit system run by a philosopher king. But it's not until Satoshi develops Bitcoin that you actually have an example of a shared, immutable, true ledger system, or fair ledger system that's conservative. And by conservative, I mean like thermodynamically or physically conservative, like not leaking energy. So because we never had a proper money, then I don't think any classically trained economist could have developed an engineer, a physically grounded or mathematically grounded understanding of monetary economics.
So they have to learn from new.
Well, what happens next is, since they don't have a physically or scientifically grounded basis for monetary economics, then you don't really have a scientifically grounded basis for economics. And that means that everything that follows, which means corporate finance and investment theory, is also not scientifically grounded. So what you have is people, they're people working to develop, call it a particular solution to a problem, but not the homogeneous solution to the problem. And the particular solution to the problem is a set of rough guidelines that work only for a certain amount of time, only subject to a certain set of assumptions. So, for example, Warren Buffett is the greatest investor of the last 50 years. Warren Buffett's investment advice is limited to picking stocks, equities, primarily equities in the United States, in the US dollar system. And occasionally he utters a few words on real estate, and he talks about commercial real estate a little bit, but mostly just equity picking, stock picking. And of course, if you think about that, you think, well, what are the assumptions he made? Well, the assumption is the United States won't fail as a country. The assumption is the dollar won't fail as currency. The assumption is that companies will be allowed to exist by the political system and the US won't become communist. Because if the political system shifts, companies don't hold any economic value at all. The value of all equity goes to zero in a communist system, right? Right after Lenin or Stalin or Castro took over, there is no capital value in any stock. So you have to make an assumption about the political system. But then again, if I take you and I drop you into Weimar Republic or Nigeria, or let's just take Argentina. Argentina in the year 2000, and I give you $1 million and I say you can buy anything. Okay, well, buy any company. Let's say I constrain you to buying companies. Well, what's the winning choice or winning strategy in Argentina if you're limited to buying equities in Argentina? And the answer is there isn't any. There's no, even if I made you God, even if you knew the future, if you could go forward in your time machine 24 years, see exactly what's going to happen, and then go back to the year 2000 in Argentina, if I construct the system or I construct the model such that you have to pick from amongst an infinite array of companies, there is no winning solution. They're all losing because all companies are currency derivatives. And the Argentine peso goes from 1 peso to the dollar to 1,400 pesos to the dollar, which means that anything valued on cash flows is worthless. So here, we didn't see the political system go communist. What we saw was the currency goes to zero. And if the currency collapses, all currency derivatives collapse. So let's expand the investment model or the range of investment choices. And let's say you can invest in not just stocks, but you can invest in real estate or commodities, or you can invest in bonds. Okay, there's not a single bond that pays off in pesos that doesn't go to zero. There's not a single piece of commercial real estate that pays you rents in pesos that doesn't go to zero, because they're all currency derivatives, and they're currency derivatives correlated to the ARS, to the peso. So if I have a time machine and I go forward and I know that the peso is going to devalue by 99.9%, it doesn't matter what your investment theory is with regard to choosing between real estate, bonds, and equity. Portfolio diversification is irrelevant. What you're doing is you're shuffling deck chairs on the Titanic. And so the big insight is the theory of economic relativity, or just understanding the Doppler effect, or understanding that it looks like the mountain is flying up in the air, but it isn't. You're falling. Right? When you're falling with a big ego, you think that your investments are going up in value, but what's really happening is you're crashing to your death. You just have a big ego because you're arrogant, because you can't imagine having fallen off the cliff, right? So if I get you, high on drugs and you just fall off a cliff, you're like, I'm flying. No, you're not flying, right? You're dying. Okay.
You're dying.
So in this particular case, if you have a big enough ego to assume that the country you live in will go on forever, and to assume that the currency that you breathe and the currency that you operate in will hold its value. Then portfolio theory and economic theory and Keynesian theory and real estate analysis and equity analysis and stock analysis, all of these subjects matter. But literally, if I put you on the deck of the Titanic, the only, when people start screaming, the only question that matters is there a hole in the ship? Will the ship sink? And after you answer that question, the only other question is, how do I get off the ship? Right? And so I think that if you think about it that way, you have a bunch of economists for the past 100 years. They don't really appreciate monetary economics or monetary physics. Probably they haven't written papers that are informed by physics, informed by engineering, informed by mathematics, and informed by cryptography, and the like. And so you started with an unscientific discipline, really more of an art. It's an art, not a science. You started unscientific, and then because you never saw what is the material of economics? What's the fluid of economic energy? It's currency. Okay, what is capital? Right. Most economists don't even. If you go to Chat GPT and you type in define capital, the answer is awful. If you go to Google and you Google capital, you say define capital. What is capital? Go and ask 100 economists or 100 business people, what is capital? And the truth is, they have awful definitions, right, of what capital is. They struggle with it. And it's ironic because, capitalism is what we think we're doing, right? And capital markets are supposed to be moving capital around. And economists ought to be interested in the creation of capital and the proper allocation of capital, but they don't really understand what capital is. And they don't understand it because the way they move it around, their capital assets are all currency derivatives. A bond, a value stock, right? A piece of commercial real estate is a currency derivative. And then the currency is corrupt and it's crippled, right? And crumbling. So if you look back over the history of civilization, read Durant's Story of Civilization, and what you're struck by the fact that infant mortality rate in London in the 18th century, it's 70%. Until it goes to, and then when you actually move out of the city, maybe you get to 40% infant mortality rate, and the average person's dying at age 30. And now you start to trace, well, why are they dying? They're dying because of dirty water. They're dying because of dirty air. They're dying because of dirty food. They're dying because of dirty instruments, dirty surgeries, right? They can't fix their teeth, dirty teeth. They don't know about sterilization. They don't know about antibiotics. They've got dirty air. They don't have clean air, clean water, clean food. If you drink water, you're drinking the sewage water and you're getting dysentery and cholera. Okay, so what do we do? So we drink wine and beer. Okay, great. So then we get gout because we're drinking alcohol all the time. So what is the story of civilization? It's you have to overcome this two ideas. One is you're trapped in a dirty system where all the fluids are dirty. The food's dirty, the water's dirty, the air's dirty, everything's dirty. And then the second is you have to get over your superstitious ideas like the solution is I bleed you to death. I'm going to bleed you. I'm going to bleed the bad stuff out of you, right? So I'm leaching the energy out of your body. Today, you would say, pretty stupid. I'm operating on someone with rusty equipment. I'm infecting them. I'm bleeding them. I'm feeding them food that's got bacteria in it. And I'm giving them drinking water, bacteria in it. And oh, everybody's dying. Okay. So but they didn't know, right? They didn't know the instruments are dirty. They don't know about boiling water to avoid infecting the mother during childbirth, right? They just don't know. So the entire field of economics, it's got the same two ideas. Basically, the money's dirty, the money is ineffective, it's toxic. Like capitalizing a company on the peso or the Naira or the Weimar mark, right, or something, capitalizing on a currency that's crashing and collapsing, the Russian ruble, right? That's you know just as bad as feeding your child sewer water, you know. And then the second thing they don't get is you don't help the patient by bleeding them. And so when you're inflating the currency, you're sucking the economic energy out of the system. So coming back to the question I posed, what is capital? Capital is economic energy. Okay, what are all these assets? They're all capital assets. They're just ways we have to take the economic energy and we have to swap it into an asset that we can then use to trade in time or space. Okay, so coming back to Argentina, what's the winning strategy? The only thing you could possibly buy 24 years ago with $1 million would be a scarce desirable asset that you can leave Argentina with, right? So if you buy a Picasso in the year 2000, you would still be rich, because it's assuming you can cover the maintenance. If you buy a bar of gold that you can get out of the country, maybe a bar of gold, a Picasso, maybe. If you buy a plane, a yacht, a boat, their maintenance cost is such that they're basically bleeding energy out over 10 to 20 years, and so they're not good long-term capital assets. Everything else that's a currency driven in the country is defective and dissipating energy, at a ridiculous rate. So the economists, they start with this lack of understanding of what a capital asset should be. And after and what are any economist that thinks that a bond which is a currency derivative is capital asset, right, starts by basically prescribing that you bleed 10% of your blood out of your body every week as a prescription to be a good athlete, right? It's like that's the start. So if you have a bond based upon a currency collapsing at 14% a year, right, you're going to, in essence, kill yourself within, 10 years, 5 years even. And if the bond is built on a currency collapsing at 7% a year, which is the US dollar, then maybe you've got a 15, 20-year life of the capital. And if, on the other hand, you bought a capital asset which would last for 50 to 100 years, maybe if you trade wisely, you can make money. That's what wealthy families in Europe or the United States do. They own buildings in London or Paris. But the problem with, like, what's the best capital asset? Maybe land. But the problem with owning land is there's a property tax of 1% a year. And if the government reappraises the value of the land, statistically, $1 million or €1 million invested in land is going to come with a tax bill of €1 million over 30 years. And so maybe 50 years. So the truth is, land is only a 50-year capital asset. A bond is a UST bill is a 15 or 20-year capital asset. A weaker bond is a 10 or 5-year capital asset. And what do you have to be to hold capital longer? And the answer is you have to be the royal family of England, right? You have to be a sovereign. If you're the emperor in Tokyo, if you're the royal family in the Middle East and you own land, then you can hold the capital asset for 100 years or 200 years. Why? Because you don't get taxed on it. You see, the reason that the royal family owns the land in the middle of London is they're not getting taxed 1% on the value of the property. It's the tax that kills you. And so what institutions are the longest lasting institutions in the Western world? They're tax-free institutions, the church, the universities, and the royal families. and they all have the same thing in common. Generally, what they get tax abatement on property tax, and that's what you need desperately, right? I'll make another observation about tax, right? Which is, most people don't think about this. The best tax treatment, right, is if you're sovereign, you don't get taxed on anything in the territory that you can control. You just have to defend the territory. And then the sovereign can designate an asset as legal tender. And if I designate an asset as legal tender, it means it isn't taxed on a trade, a vibration of the asset, and it isn't taxed on time, and it isn't taxed on a transfer of entities or on a mortality event, right? I'll probably say sometimes it is taxed on mortality, by the way. So probably I'll take that back and I'll say,
I think inflation is a form of tax, right?
well, that's a separate idea. What I'm getting at is, if I give you euros and you give them back to me and I give them back to you and you hold them, there's no tax event that takes place for
No
the
tax
next
event,
decade.
yeah, right.
And if I ran the euro currency such as there was no inflation in it, then you would have the same amount of capital 10 years from now, even though you engaged in 10,000 transactions, right? Now, we're going to leave inflation aside because I just want to focus on tax. Taxation is a source of economic energy dissipation. Inflation is a separate source of energy dissipation. So with tax, if I then take that legal tender and then I designate it as property, or let's say I designate it as as a property asset, like a bar of gold, or maybe I designate it like equity. Now, if I give my equity to you and you give it back to me and I give it back to you and there's volatility, then there's a capital gains tax, a short-term capital gains tax if the frequency is less than a year, otherwise a long-term capital gains tax. And so anything that's designated as an investment asset or a property asset gets taxed on the trade. And so every time you vibrate it, you change the form of the economic energy. You change it from Apple stock to an S&P index, to a building, to legal tender, back to a bond, back to Apple stock. There's a tax every time that changes hands like that. So that tax dissipates economic energy. That's a friction. Now, but that's not the worst treatment. The worst treatment is, I call it real estate property. And now if it's real estate property, it's a building, then you don't get taxed just on the trade. If you buy the building from me, I get charged capital gains, and then when you trade the building to someone else, it's a double capital gains. But then when you don't trade the building and you just hold it for a year, you get the property tax on it. So when I designate something like that, it actually becomes taxed on the trade and the transaction, and it gets taxed on time. You could hold the building in your family for 100 years and not trade it, and you still get taxed 100% of the value of the building, you see. Maybe 200% of the value of the building over 100 years. So that's worse. But then there's a triple tax, which is when I put an excise tax, like for example, in London, there's a tax on the capital gain. There would be a tax on just the trade of the building, an excise tax, and then there's a tax on holding the building. So you can triple tax an asset if you want to. So when you think about that, and I haven't even got to the impact of inflation. The quadruple tax is then I inflate the currency, and because the currency collapses, the nominal value of the building goes up, and that means that when I trade the building and it has a real value which is equal to what it was 10 years ago, the nominal value is double, and then the government charges you a 30% capital gains tax on the $1 million.
Because of the nominal raise of your price, right?
So
But
in that
it's not the
particular
value.
case, it's in the government's best interest to basically inflate the currency and scare the property holders into having to trade it. Of course, I haven't got to the city tax, the neighborhood tax, and the provincial tax and the state tax, right? So my point here to all this is you started with €1 million worth of capital. And then the question is, how much capital will be left over 100 years if you're moving the capital a different way? And I come back to Tesla's observation. If you want to understand the universe, think in terms of energy, frequency, and vibration. Well, this is exactly what we don't do in politics or economics. And we don't really do that much in investment theory. Anything that an investor like Charlie Munger or Warren Buffett, they give you kind of conventional, particular solutions, but they're only useful if you don't question the assumptions and if you're living at the same time period they lived in. If you got to go back to 1970 and be a United States investor living the same timeline as Charlie Munger and Warren Buffett and did the same things they did, then their rules are relevant. But their rules don't make any sense in the Weimar Republic or the 16th century Spain or in Africa today, because they're just particular solutions to a differential equation based on a set of assumptions that aren't valid. So that they're not wrong in their frame of reference. They're just not right in the universe.
In the regular view, right?
Yeah, and so let me just make that last point on Tesla, and then so people understand the point I'm making, then we'll move on to the next topic, which is, energy, economic energy is capital, and vibration is every trade or transfer. Every time you trade capital for a building, for a share of stock, for a bond, for a currency, for an ice cream cone, right? You're vibrating the economic energy through different transformations, just like kinetic energy becomes potential energy, becomes acoustic energy, becomes, whatever, electrical energy, right? They're vibrations of different types, and there is an impedance, there is a friction, right? There's a loss of energy through that vibration. And then the frequency is referring to the rate of vibration and the time and the duration over which you hold that asset, that material. What are you holding it for 100 years? Are you holding it for 100 milliseconds? And once you start to think that way, well, then a lot of things become very clear, right? There are some capital assets you can't hold very long. There are some, and there are the rate at which you dissipate economic energy is a function of the frequency with which you're vibrating, and then also the entity doing the vibration and the nexus, right? A church can move money through 100 different assets back and forth tax-free. A university can hold the same property for 1,000 years tax-free. Your family can't, you see? And so when you start to understand the solution to the problem is different for an individual versus a trust company versus an operating company versus a sovereign entity, depending upon what nation you're in, what city you're in, what neighborhood you're in, and whether or not the capital is oscillating in the physical domain, the financial domain, or the digital domain. And of course, you're not going to get that speech out of Charlie Munger or Warren Buffett or any economist, right? Their world is very, very constrained based upon what they learned, and they engage in lots of discussions of faux metrics, which are meaningless in their constrained synthetic world. And as long as their world consists of other people that live in the same world, then they have these synthetic, faux conversations that don't at all relate to the greater universe, but they just can't see the greater universe because they've just grown up in this very synthetic, idealistic, theoretical world that that's all they could imagine. Because just like doctors didn't understand germs, so they had a microscope. Until you have X-rays and microscopes, you think that that illness comes from demons and spirits, but because you imagine stuff, superstition, you need an explanation for why you're dying. So you have to imagine that God struck you with evil spirits and a curse. And then when you actually can see the cells breaking down, now you know you're dying of something very, very precise. You know why you're dying. It's you're drinking too much alcohol, or because someone cut you with a rusty blade and you're infected. And at that point, you're on a path toward a solution. And I think we're at this inflection point, moving from economics as art, colored by superstition and religion and ideology. And we're crossing this boundary where economics becomes science, and it's informed by mathematics and engineering, right? And the scientific method. But, you have to date that, in my opinion, to January 3rd, 2009, when Satoshi unleashes Bitcoin, and there's a singularity, and all of a sudden there's actually engineering, physics, and mathematical principles that are starting to spread in a viral fashion through the economy. And it was like a nothing, and then it's $1 million fire, and then $1 billion network, and then a 10 billion, then 100 billion. Now it's a $1 trillion network. But still, $1 trillion is 0.1% of the economy. So 0.1% of the economy has clean money, and 99.9% of the economy runs on dirty, toxic assets that are defective, that are operated by people that don't know they're trading defective assets. Because how would you know if you'd never seen clean? How do you know that you're dirty?
Yeah, you don't know what clean is or dirty is. You can't measure it. You have no idea of this. So that brings me to my next question, because you often say Bitcoin solves 50% of all problems in the world. But don't you think that most problems today finding their root, nearly everything finding their root, are evil in fiat currencies? So I think we will have new problems when we probably on a Bitcoin standard. But what the other 50%? What do you think?
It's if we think about electricity and clean water, people used to die at age 30, and then we introduced electricity, infinite clean energy, and infinite clean water, and then we introduced antibiotics, and we introduce maybe clean food and clean room manufacturing, and now people live to 70 or 80. Okay, so everybody's lifespan doubled, and probably, if you died between ages of 30 and 70 before, you died for one of those reasons. Now we're living to 75 or 80, but we still got problems, right? And the problems are based on religious differences, political differences. We haven't settled the communist versus socialist versus capitalist issue. We haven't eliminated inequality. In some cases, the problems are introduced by abundance. Like now we drink ourselves to death. We can create too much sugar, too much It used to be people died because they starved to death, right? Throughout human history, the number one cause of death is you starve to death. We don't starve to death anymore. The number one cause of death today is metabolic disease. We eat ourselves to death, or we drink ourselves to death. So I think abundance creates its own problems. And with Bitcoin, what Bitcoin does is it's digital capital. So it reforms the capital markets, and it makes it possible to, instead of holding capital for 30 years, you could hold capital for 3,000 years. Okay, so it stretches out the duration of your capital, instead of being able to oscillate the capital, at 10 vibrations per year. You could oscillate the capital at 100 megahertz, right? it's something much faster, right? We've got high frequency oscillation, and we've got long duration economic longevity. But we haven't solved the issue of, how should we deal with entitlements? How should we deal with a disagreement over global warming? We disagree over foreign policy. We disagree. We have, you have these great digital companies, Apple, Google, Facebook, Amazon, and now you can basically plug into 1 billion people. And now there's a disagreement about whether or not the politicians should be able to tell the companies what they can say or do. Right? It's like now it's possible for us to give free information to 8 billion people, but now one government would say, well, we don't want you to give that information. Well, another government will say, we want you to give that information. What happens when two governments disagree about what the 8 billion people should know? You've got a foreign policy issue, you've got a military issue, right? That China blocks Google, YouTube, and it blocks X and Twitter in China and Facebook.
They fear free information. That's what they do. That's the reason why they burn books or do things like this. They fear information.
Well, so there's there's just a disagreement, right? And so there's disagreements. What is censorship? What is misinformation? If I create an AI fake of you, or an AI fake of me that says Bitcoin is bad, I hate it, I'm selling all my Bitcoin, and it gets released and it goes viral. Okay, is that free speech, or is that a scam? And there's a disagreement about how to deal with it. So I have laser eyes, and you'll see them on X, and I keep them. And the significance of laser eyes is
you can hear them.
Yeah.
You are focused, right?
I'm focused. I think that there's one good thing. I believe in clean money. I believe in digital capital. I believe that there's $450 trillion of wealth tied up in physical and financial capital assets that are defective. I believe, and I said this in Nashville a few weeks ago. I said that 450 trillion is bleeding off 3 or 4% of its economic energy each year. That means it's a $10 trillion inefficiency in the economy due to entropy and due to inflation. So that's a very clear problem to me. I believe we can solve that problem through the digital transformation of capital. I believe that every family, every corporation, every institution, every government would benefit from recapitalizing on digital capital that will make them live longer and happier. But I can't solve your family problems, right? People are still going to get divorced. Children are still going to fight with their parents, right? People are still going to disagree about whether the mayor's policy is a good policy or a bad policy. There's still going to be multiple parties. They're still going to disagree about wealth inequality. They're still going to disagree about whether they should fight the war or not fight the war. They're still going to disagree about the meaning of God and who's God and religion and the implications. And they're still going to disagree about lessons from history. And we can't, and medicine, should you take that, drug? Is that vaccine good for you? Well, I mean, the smallpox vaccine seems to have been a success. It used to be that, 1 out of 5 people died of smallpox. I get it. But I also understand people that don't like modern vaccines. They think they're rushed. And maybe, there's too many coming too fast and they haven't been tested. And, there are various diverse points of view. And, and modern medicine is a miracle, but a lot of people abuse it, right? And so you can have 100 opinions on that, but at the end of the day, I think keep those to yourself. If you want to do good for the world, I believe that humility suggests if you devote 150% of your time to one subject and that's all you think about with every waking moment, and you attempt to come up with the most informed insight on that one subject, it's perhaps possible that people might actually get benefit from your opinion. But pride cometh before a fall. And so when you start thinking that you can have that informed opinion on 10 subjects by allocating 10% of your time to each subject, right? Or maybe, there are people that opine on 100 subjects. But it's not likely that with 1% of your time, you're the world's expert on all 100 subjects, and even if you were, 100 times smarter than the genius, right? There's someone that's as smart as you that's focused upon this one subject their entire life. Even if you thought you were godlike and smarter than them, the world doesn't have the bandwidth to absorb 100 different ideas from you. So I think if you want to be effective, you need to be laser-like and focused, and it's practical, but also it's just humble observation, and let other people focus on solving the other problems. And I think, like, curing cancer, is that one problem? Or because I'm sure none of my background qualifies me to cure cancer, but it's not even one problem, right? It might be 100 different types of cancer and 100 problems, but it might be 1,000 different problems because it's a different answer for different types of people. Maybe it's 100,000 problems, and 100,000 different people need to devote their entire life to curing one strain of the one thing, and that's okay. So I think humility and focus is really critical to making progress effectively.
Yeah, I agree totally. And I think you only can control your own life. You don't know what's good for other people. So in the end, this is what probably Bitcoin brings to us, the sovereignty about your life, not about the life from others. That's the point. I think everyone has to solve his problems by themselves, right?
I have one other point, which is some problems are straightforward and they're solvable within your lifetime. For example, look at Google and Facebook and Apple and Amazon. They actually solved problems that were useful to a billion people, and they did it within 20 years.
But the people use these solutions free, like they are not forced by the government or so.
Yeah, I mean, that's a different topic. But my point is, you can give YouTube, or you can give books to a billion people, and you can do it in 10 years, and it's a meaningful advance forward. Solving the problem of what books they should read, we might be debating that for 1,000 years. And so we come to Bitcoin. You can solve the problem of impaired capital, right? Let's come back to the elephant in the room. The capital markets are defective. The existing traditional finance capital markets, they operate something like, 19% of the time, right? From 9:30 in the morning till 4 in the afternoon, Monday through Friday, you've basically got, 32.5 hours, right? 32.5 hours out of 168 hours a week. The capital markets function in the United States. So they function that way, but they only function that way for about 10% of the people in the world, right? Maybe 800 million people have access to that capital market at best. So what you've really got is a 2% solution. You've got a tenth of the world, that's able to access the markets 20% of the time. How does someone in China access the US capital markets? How does someone in Asia or Africa? How does an Australian access the US capital markets during working hours in Australia? How does an American access the US capital markets on the weekend? Right? There is no capital. There is no, the money markets shut down. The capital markets shut down. There's no liquidity. There's no leverage. Also, all of the assets that circulate on those capital markets are, for the most part, currency derivatives. So, under the best of circumstances, they're USD currency derivatives that are bleeding 7% of their economic energy a year. So, what you have is is capital markets available to 2% of the world. There are gatekeepers that, there are circuit breakers. Like, look what happened the other day where the Tokyo Stock Exchange, the futures ripped up and they shut down the futures market and shut down the stock exchange. Right? And look at the bond markets. The number one capital asset in the world is the US T-bill. It's not liquid and functioning 24/7, 365. So the only capital market that is 24/7, 365 that's functioning is Bitcoin, right? Bitcoin is digital capital. It is open to the entire world. It is egalitarian. It is programmable. It's intelligent, right? And in that particular, and it's true, right? It is, and that makes it very volatile. But the volatility attracts market makers. And that's why someone will actually post $20 billion of collateral and they'll give you $20 billion of liquidity on Sunday afternoon during the worst financial crisis of the year, on a day when everyone else is afraid to do anything. You can actually find billions and billions of dollars of credit or liquidity. If you actually needed to travel to Tokyo and on Sunday afternoon someone held a gun to your head and you needed to liquidate 25% of your assets for cash in an hour, you can do that with Bitcoin. You cannot do that with bonds, equity, real estate, gold, diamonds, fill in the blank. There's, you probably couldn't even do it with a lot of currencies, right? The banks are closed. So what you have here is you have a 20th century economy running on a crippled system with defective assets. And then you have a digital opportunity where you can actually run on a digital capital that is 100% available, that has, where the capital has a useful life of 10,000 years, not 10 years, right? Where the impedance to the transfer, is theoretically close to zero, other than, whatever taxable issues pop up depending upon your domicile. And that's the world that we're building right now. That's the opportunity. And so the reason I'm laser-like focused on Bitcoin is I think within 30 years, it's very reasonable, within 30 years from when Satoshi launched that network, you could actually introduce $100 trillion digital capital market that takes us from a 2% solution to a 100% solution, that takes us from a 10, 20-year duration economic life expectancy to a 10,000 year economic life expectancy. So it's something that's achievable. It won't cure cancer. It won't get us to Mars. It won't solve, religious and political and social and ideological differences. Those things have to be solved by somebody else. And I will leave, it's their life's work, and maybe they will, and maybe they won't. But I think as a technologist that the breakthroughs in civilization are fire, steel, electricity, petroleum, internal combustion engines, nuclear reactors, airplanes, railroads, right? Straightforward radio, right? Straightforward things, and then Bitcoin, digital capital. These are the breakthroughs. Each one of them came and it made the world a better place, but we still used it to fight wars, and we still use, and Stalin used steel and Stalin used electricity. And so you're going to have issues. When I say 50% of the problems are solved by Bitcoin, I mean that 50% of the problems can be solved by digital capital, but the other 50%, they're going to be the work of corporations and politicians and institutions and intellectuals for the next 1,000 years, and that's okay.
So you think that's the time frame where the dollar still will be alive next to Bitcoin?
Yeah, I mean, I said in my speech in Nashville a few weeks ago, my base case is Bitcoin grows, an ARR of 29%, and if even if it goes to 13 million a coin over 21 years, 13 million is a lot, right? I mean, if you're looking at where Bitcoin is today, and it goes to 13 million, it's a 200x. Bitcoin would still only be 7% of the world's wealth.
Yeah, dollars much larger,
And,
right?
bonds will still be larger, equity will still be larger, real estate will still be larger. I don't, I happen to see that there's a dualism in the world that will continue. There will be currency, digital currency, and there will be digital capital. And I believe that digital currency will be whatever is designated as legal tender by the dominant nation states of the world, right? For the reason I pointed out, the tax reason. If China and the United States designate the CNY and the USD as legal tender, then you're going to be able to oscillate it at high frequency in an economic transaction with no taxable event. And so it's going to be the dominant currency asset. And on the other hand, Bitcoin will emerge as the dominant capital asset. But there are other assets that people want. They're still going to want credit. Companies and individuals will still want to borrow money, right? I mean, why wouldn't you want to borrow money? And governments will still want to borrow money. And there will still be companies like Google and Apple, and they will have equity. And there will still be people that want to live in buildings and houses, and there will still be skyscrapers and commercial buildings. So asset classes like commercial real estate, bonds, and equity will continue as long as there are people living in the real world. As long, robots might do all the work, but we'll still have warehouses to put stuff in from the rain and the snow, right? We'll still have airplanes. We'll still have trains. Someone will still securitize them with debt or equity. And there'll still be companies. Apple does something, it creates the iPhone. You can't create the iPhone. And so, as long as there is specialization of labor and capitalism, there'll be companies. When the world goes communist, there's no equity. But I'm not forecasting a world descended to communism. If all the nation states collapsed and there were no nation states, there would be no designated currency. But I'm not forecasting that. I don't think a world without Apple and without nation states is a good world, right? So I'm not a pure anarchist. So I don't see the dollar disappearing. It's the dominant currency. If anything, I don't, and I think that when you construct this argument as, Bitcoin is against the dollar or Bitcoin is against the currency, I think it's unnecessarily confrontational, and it's not constructive, and it misses the point, which is Bitcoin is capital. And Bitcoin really is demonetizing real estate, equity portfolios, and bond portfolios held as capital. And that's a $400 trillion addressable market, and Bitcoin is 1/400th of it. And so, if you're going to pick a fight, why don't you just pick a fight with gold and buildings and companies that have overpriced stock? They're not going to arrest you, right? Right? They don't have armies. And the truth is, they're really the enemy. I mean, the enemy is I invested $400 trillion into real estate, buildings, and overvalued companies, and I could have just put it into Bitcoin, and Bitcoin would be worth 400 trillion instead of 1 trillion. So why don't you just focus upon that? Because eliminating banks and eliminating the government comes with a lot of other problems. Like what are you going to do when the government collapses and there's anarchy in the street and the police all go home and everybody gets to be their own policeman? And it's like it's a nice fantasy that you're going to defend yourself with a gun, But the way it really works in war is someone over the horizon sprays a bunch of bullets over the hill and they hit you not even knowing they killed you, right? It's like you're not defending yourself against anything when anarchy breaks out because they're just going to set the city on fire, right? You can't shoot a fire with a bullet. And so it's in our best interest not to encourage anarchy. It's in our best interest to actually, instead of praying for the collapse of your bank, of the corporation, and of the country, it's a better idea that you fix the bank, fix the corporation, fix the country. And when you've got someone in your family that you disagree with and they're unhappy, it's better to make them happy than it is to go to war with them. And so, just like anything else, it's like try to figure out why these bad things happen and then fix the underlying cause. And and you would say, and I would agree, a lot of times the underlying cause is bad money, right? Broken money is an underlying cause. It's not the only cause, right? The fact that the company failed and everybody in your city lost their job because they didn't have a treasury, that can be fixed by recapitalizing the company with Bitcoin. But you can't fix the fact that the company creates defective products that nobody wants to buy. So if the problem is the balance sheet, then you fix that. If the problem is the operation or the operational mission, I wanted to sell you, Xerox machines, or I wanted to sell you cameras with film in them and nobody wants to buy them anymore. You can't fix that, right? That you just have to bow to reality.
Yeah, and I think in the end, probably the dollar has to be become a better currency when Bitcoin is an opponent, right? So I think we will get a better world if we Bitcoinize the world without deleting the dollar, especially because we will live in this time frame where it probably happens. So it could probably happen in the next 1,000 years, but I don't think we will see that. So I totally agree with that on you. I have one or two last questions. We can do this very quickly because I think you can celebrate this weekend, because on this weekend it marks the 4th anniversary of your announcement that MicroStrategy will be pursuing a Bitcoin strategy, right? So since then, the price of Bitcoin, along with the stock value of MicroStrategy, has multiplied. In fact, the stock value has grown even more than the company's Bitcoin holdings. How would you explain this?
Yeah, Saturday is the 4-year anniversary of our announcement. I think we announced our Bitcoin strategy August. It was like August 10th or August 11th, I guess it came out, something like that. So it's 4 years, and Bitcoin is up 5, 6x. Our stock is up 10x. And how do I explain it? The explanation is if you look at Bitcoin's performance, it's been compounding at an annual growth rate of about 55% a year for 4 years. And the S&P has been compounding at about 13%. So the TradFi, the conventional cost of capital, is 13%. But the digital cost of capital is 55%. And the 13% probably, it kind of suggests that the money supply, the currency supply, probably expanded about 10% a year. If you basically assume that companies create 3% productivity a year, then the 13% improvement was maybe 3% productivity, 10% inflation. Something like that. And you could debate, is the inflation rate 13% a year or 12 or 11 or 10? But the number is somewhere in the 10 to 13% a year. And I'm just going to say 10%. So as you're inflating the currency supply 10% a year, a diversified portfolio of of powerful companies kind of about tracks it and keeps up, maybe slightly ahead. Most other assets are falling behind. Gold fell behind. Bonds are, down. Bonds are minus 5%. Okay, so what's the winning strategy? Well, take all of your money, all your treasury, and MicroStrategy had $500 million at the time, If we'd held it in bonds or invested in bonds, we would have had minus 5% a year. We would have had 400 million, right? So that was a losing strategy. And if we'd rolled it into S&P index, we would be up, 30, 40% or whatever, 13% compounded. But the problem is the regulations for a public company don't allow you to do that. You're not allowed to, as an operating company, invest in a securities portfolio. So we rolled it into Bitcoin. If you rolled it into Bitcoin, you get a 55% improvement a year. But how do you outperform Bitcoin? And here I'll just make an investment analysis. I say, when I look at portfolio theory, if you bring me an idea, like an investment idea, my cost of capital is 55% risk-free, right now, right? Bitcoin is 55% risk-free. Everybody's like, well, it's all volatile. It's volatile, but it's 55%. So at the end of the day, once you've accepted Bitcoin's volatility, you're long Bitcoin, the volatility doesn't matter. The cost of capital is 55% risk-free. If you want to pitch me a business idea and you guarantee me 65%, it's kind of like a distraction. It might be interesting if I loved you, but it has to be a guaranteed 65%. If you come back to my base case where I say 29% ARR over 21 years, well, then you'd have to pitch me something which generates 40% a year for 21 years, risk-free or guarantee. There isn't anything, right? There's nothing. So no conventional idea makes any sense. So how do you outperform Bitcoin? And the answer is the only way to outperform Bitcoin is more Bitcoin. So what did MicroStrategy do? Well, first we rolled all of our treasury into Bitcoin. And then what we did, when we did that, maybe half the enterprise value of the company was Bitcoin. And so you would have a business, a $500 million business growing 55% a year, bolted onto a $500 million business growing 0 to 5% a year, right? Because most businesses don't grow at 13%, right? The 13% that's the S&P index is weighted by Google and NVIDIA, that grow outside of that. And the other 495 companies grow 0 to 5% a year.
They decrease it, right? Yeah.
Yeah. So what we did first was we bolted on a $500 million digital capital business that's growing 55% a year. Then we went and we borrowed $650 million at less than 1% interest. A few months later, we took advantage of the capital markets, and then we bought $650 million of Bitcoin. So at that point, we now had a $1.2 billion business growing at 55% a year, bolted onto a $500 million business growing 0 to 5% a year. So now we're getting to 75% of our enterprise value. But what do you do next? Well, then a few months later, we borrowed $1 billion, more than $1 billion at 0% interest, and we bought Bitcoin. So you see, then we got to about 80% of the enterprise being that digital capital business. And then what do we do next? We borrowed another $500 million in a senior note. And at that point, we're starting to look like we're 100% Bitcoin. Then we issued $1 billion of equity. Then we did another billion, a few billion more in converts. And so all told, we raised $7.5 billion, or you can count it all up, but $7 to $8 billion of capital to invest in Bitcoin. And the company became more than 100%. We became 120%. You're like, well, are you 100% all in? No, I don't want to be 100% all in. I want to be 125% all in, right? I want to be double, triple maxi all in. Why? Because if Bitcoin is appreciating at 55% a year and you can borrow money at 5% a year, you're basically getting 50% a year on every dollar you borrow. Borrow $1 billion and you're making 500 million a year, right? So why wouldn't you? And of course, we we borrowed money. We have a blended interest rate of 1.6%. So we're borrowing money at 1.6% and we're investing it at 55%. So the question is, so how did we do so well? We basically got more Bitcoin because we're using the capital markets and our position as a publicly traded operating company to issue securities to convert to BTC. The most credit-worthy entities in the world are United States listed, publicly traded, large operating companies, right? If you have a long track record, right? We've got 30 years of financial statements. Everybody knows us. Everybody knows me. You could figure out what I was doing 20 years ago, 25 years ago. You can figure out how much, we made or lost every quarter since 1995 or something, right? So there's a lot of information there that makes us more creditworthy. And so if you could borrow money, let's take any individual. If you're an individual family and you've got a bunch of real estate and you could borrow money in a government subsidized mortgage for 30 years for 3% interest, and that was the case in the US 2 years ago. If you could do that and you bought Bitcoin appreciating at 55% a year, it would be a pretty good idea to borrow €1 million or $1 million, pay 3% interest for the next 30 years, and then invest it in an asset that's going up faster than 3%, right? In fact, that's how you get rich. I mean, that's the number one way you get rich. You basically go levered, long, desirable property. Borrow $100 million to buy $100 million building, and then let inflation drive up the value of the building to 200 million. And now you just made $100 million on $5 million of equity. How do you convert 5 million into 100 million? Well, you have to post 5 million of equity, lever it up with 100 million of debt, buy something that's going to appreciate in value. So that's what MicroStrategy's done. In essence, we just did it with digital real estate. I mean, the world's most desirable property is Bitcoin. And we did it before anybody else appreciated this dynamic. Obviously, I'm telling everybody, and some people will do it, but as they say, everybody gets Bitcoin at the price they deserve. And you in order to appreciate Bitcoin as digital property, you have to put in the 100 hours in order to understand it. And then after you put in the 100 hours to figure out that it is desirable property in cyberspace, then it becomes very simple exercise. You buy it with the cash you have, you buy it with the cash flows you generate, and then you ask the question, can I borrow any money? And if you can borrow money, on terms where the note won't come due in less than 4 or 5 years, you're probably okay. If you're borrowing money mark to market, you don't want to take 10x mark to market leverage because that's impermanent capital. You might get wiped out on volatility. So short duration, capital, not a good idea, but a 10-year note, a 20-year note, a 30-year note, a 7-year note, not mark to market, that's a good idea. And then if you can raise capital via equity, if you have a business, if you were in Germany running a supermarket chain or a restaurant chain, and you could sell, and your chain's valued at 500 million euros, and you could sell 500 million euros of equity, and then buy Bitcoin with it, then your supermarket's probably growing 3% or 4% a year. The Bitcoin's growing 20 to 40% a year. It's just like doing an acquisition of a digital monopoly growing 20 to 40% a year forever. I mean, if you went to any business person and you said, hey, I found the next Facebook, and I guarantee you they're going to grow 20% a year for the next 20 years, and you can buy them at 2 times revenue or 1 times revenue or something, would you do the deal? Of course you would do the deal.
Sure.
And so Bitcoin is the perfect merger partner for anybody. And so buy it with cash, buy it with equity, buy it with debt, right? Buy it any way you can. Don't sell it. and that's the big corporate finance idea. And the people that can do it best are private family-run companies with excess cash or credit, public companies, especially cash cows with credit or cash flows. They can do it. Institutions that are allocated to physical and financial assets that are effective, they can do it. A family, a worker. If you work at a McDonald's and you make 10 euros an hour or 20 euros an hour, if you invested in Bitcoin and then you calculate what it'll be worth in 21 years if Bitcoin goes to 13 million a coin, it's a 200x return, right? So you're making 10 euros an hour, but it's going to return 2,000 euros, in 21 years, discounted back at the conventional, interest rate. And it's like making 1,000 euros an hour working in a fast food restaurant. And so, it works for anybody, right? It works for anybody at any stage in the hierarchy. There's nothing more valuable than knowing where an asset is going to be in 20 years. It's more valuable to know that Bitcoin will go to 13 million in 21 years than it is to know it will go to 13 million tomorrow. You see,
Yeah.
If I told you it went to 13 million and it'll go to 13 million in 30 seconds, the valuable thing is the time. I need to know where it's going to. I need to know 21 years in advance because that gives me leverage. Knowing 21 seconds in advance is just a piece of trivia. It's noise. 21 years in advance, that's signal. And so you can do with that what you will, but clearly the reason I'm laser like focused on it is I can't tell you what you should do for a living. I can't tell you how to solve your personal problems. All I can tell you is how to solve your capital investment problem. And the solution to that is digital capital. And after you've sifted through 10,000 crypto networks, you will realize that the world's greatest digital capital is Bitcoin. And then you've got that as that weapon that you can use to make a better life for yourself.
That's perfect last words, really. Thank you so much for your time. I know the time is very short. Thank you for everything you said today. And I think you perfectly changed MicroStrategy from a fiat derivative to a Bitcoin derivative. And it works very fine, I think, for you and for your company. So thank you so much for your time, Michael. And thank you for watching the video.